Hey everyone, welcome to Invest in SqFt, the podcast where we dive deep into the strategies behind successful real estate ventures. Today we're talking with Jordan, a pioneer in the build-to-rent space who's not just transforming neighborhoods, but also redefining what it means to invest in yourself and your community. From scaling a multi-billion-dollar business to incorporating health and wellness into his properties, Jordan shares how he stays ahead of the curve and helps his tenants and investors thrive. Trust me, you're not going to want to miss this one.
Well, yeah, it's a fair question. I guess I never thought of it that way. I thought of it as I did multifamily because I always looked to get involved in strategies that felt very unique and that had a unique opportunity. And so I didn't get into multifamily for the merits of the multifamily asset class. I got into it because it was right after Hurricane Katrina. And at that time, the federal government was offering what was called go zone depreciation, which meant you could depreciate 50% of your basis in year one as an economic incentive to buy assets and to incentivize the investment in the markets that were most affected. So Mississippi, Alabama, et cetera. And so because I saw a unique financial incentive for multifamily, I decided to start there. But I quickly realized that it was a very efficient asset class in terms of the capital markets and even the deal flow. And so I said, I can't be so entrepreneurial in this asset class. Let me find something that has things that need some real fun and scaling and technology. And that's how I landed on single family. In 2008, I actually started losing tenants in multifamily to single family. And when I started looking into it, I said, well, that's interesting. People are pursuing single family homes because they have more space and more privacy and relatively they're similar rents. I bet that there's a lot of scaling that can be done to take that from a mom and pop asset class to an institutional one. And it turns out I was right. I was definitely one of the first 3 to 5 players that started playing in that asset class in a large scale format in '08. And by 2012, every major institutional player was investing in the asset class.
Yeah. Yeah. Interesting. So what was it that how did you start growing that asset class back then? Like, how did you start evolving this into more of an institutional grade or institutional interest level in the single family markets?
Yeah. So I started trading in the single family asset class because I really wanted to understand how it behaves and how it moves across different markets. So I identified 15 markets from California to Florida where there were, so essentially the largest foreclosure states where there was a plethora of inventory that could be accessed and that could be bought, repositioned, and sold. So 2008 through 2012, we bought, fixed, and flipped just under 6,000 homes across the country. And that gave me the experience and the data to be able to understand where I wanted to continue investing in the asset class from a long-term hold standpoint. So essentially build out a single family portfolio and run it with the vertical integration and technology that multifamily had, which at the time still didn't exist for single family. So that is what took me to phase two of the business. We kind of retrenched from this national footprint, focused on the southeastern US, and started buying and holding single family housing. That was 2012 through 2016. And then by 2016, we realized that it became a little bit of a bidding war and a cost of capital game, meaning the one that had the cheapest cost of capital was going to be able to continue winning the bids. And because I was competing with all the household institutional names that we know, I said, I'm going to have to be unique once again here. And so that's when I decided that I was going to start buying only new build production from public home builders, with the thesis there being they're in the earnings management business and we are in the product business. Why don't I offer them forward contracts for production so that if they need us at the time of quarter end reporting, they could reach out to us and it would be a great partnership. And so that's what started our third phase that eventually ended up defining what today is our multi-billion-dollar platform. And that's all we do. We transact in newly built housing and we develop built-to-rent communities.
Yeah. So, God, there's so much there. When you are looking, obviously, you've done this a couple of times now where you've identified the holes in the market and you have moved toward to be able to fill those holes with your own offerings. Can you talk about how you go about breaking down, or I guess first even identifying, hey, maybe there's something here, and then breaking it down and digging deeper and validating that? Can you talk a little bit about that type of mindset and that thought process, the way that you see it?
Yeah, I would say it really comes down to two things, and I'm not trying to be nebulous because I don't have a great answer. But I would say number one, you really have to read a lot. And so my reading tends to consist of a lot of autobiographies, a lot of market intelligence, and that combined with my time getting out there on the street and just talking to people and feeling them out. I think this goes back to this kind of empathy gene slash service oriented gene that I have where I just want to see how I can help people. And I have found in the modest success that I've had that if you just get out there and talk to people, say, hey, what's missing? How would you like to live differently than how you're living? And I would do that all the time when I was in multifamily. And I would hear things like, I really would like to have my own back porch that's not attached to the person next door. I really would love to not have to walk up and down the stairs bumping into people. I'd like to have my own space. And everything kept pointing to single family, private space, etc. I don't think it's super scientific. I just think that so many people forget that you just got to get that out there on the street and talk to people. And if you combine that with some pretty good data analytics and the ability to synthesize all that data relatively quickly, you will find the holes. And then you have to pursue them, of course.
Yeah. I'm curious, and I don't know if you'll remember this or not, but when you were going through and doing this customer research during the multifamily years, were you approaching these people, asking these questions with the current property in mind, or were you approaching that with what's next? What am I doing after this? Because I feel like a lot of people might have their blinders on and they're asking question you're asking the question, they're saying like, I don't want to bump into people moving walking up the stairs. And then you're looking at the stairs like, how can we ever possibly fix that? We can't solve that problem. But it sounds like you already had your mindset in a different place. So I'm just curious what your mindset was at the time, if you even remember. Were you looking at what am I doing with this one right now, or what am I doing 5 years in the future? Just curious there.
Yeah, it's a great clarifying question. So the answer is both. I would routinely knock on doors for current tenants and just ask simple questions like, I'd introduce myself as ownership and I would say, hey, what are we not doing well? How can we make your living experience a better one? And I would have very human to human conversations, frankly. This wasn't like a poll that I would send them or anything like that. And then once I would get the data on, or at least the feedback on what's wrong with what we're doing, how can we do it better? I would always ask, what can I do with this property to make your living experience like 100% better? And that's when I would get those insights of, hey, I don't want to have stairs or I want to have a house or whatever it may be. So the answer is, I don't know that I was purposely or with intent at least projecting what was going to happen in the next 3 to 5 years. But I always wanted to know what was next in their mind. So that's where I could move to because consumer behavior evolves. And so I wanted to know if after talking to 20 people, if I would hear some type of common theme, I would say that's where I need to be heading because that's where their psychology is today.
Got it. Got it. Yeah. So you're still looking for the commonality there, and you had the foresight and open mindedness to be able to move wherever you might need to move. Talk a little bit about the business today, right? Like you glanced over at what it was, how you guys operate. Talk a little bit more, dive a little bit deeper into what it is that you guys are looking for. Are you actually developing these properties? I'm pretty sure it's in the Southeast United States that you focus, but I'm just curious a little bit more on the business structure and how you guys approach these various different opportunities that you are targeting.
Yeah, sure. So today, I should clarify a year ago this December, I transitioned from CEO to founder chairman. We hired a fantastic CEO to fill my shoes and who's now running the show day to day. Prior to that transition, it was decided that the business plan going forward would be 80% built to rent development and 20% newly built single family acquisitions. So we say mini BTR because we don't do scattered, meaning one here and one there. They're always grouped together in kind of a 1 to 3 mile radius. So that is our kind of de facto business model. We work with the top, 20 builders in the US, of course, doing a lot of repeat business with the top five. And so our business model is essentially we will identify land or a land partner. We will JV with one of the major builders to execute the development of said project. And then we will own and operate it for a period of 5 years or 5+ years, depending on what our investment partners call for. And so that's our business model. We've done a very good job of narrowing our MSA focus from 25 plus MSAs to 10 to 15 now. And so we've become a much more narrowly focused shop. We've spent a ton of capital on technology, on some predictive analytics, on underwriting. And there was a plan put together 2 years ago to really upgrade the team, getting us ready for what will be our largest investment years coming up 2025 to 2028, where we expect that we will deploy somewhere around $3 to $5 billion into new assets, new communities.
Interesting. Yeah, that's really interesting. So, talk a little bit about the build to rent business or build to rent model, I guess you can say. As far as I know it, it's a relatively new, call it asset class if you're looking at it from an investment standpoint. But what was it that you saw there that said that this is where I need to go, right? Obviously, there's just the regular typical development where you're building the asset and then selling it all. Slight twist, slight tweak on it. What was the attraction to the build to rent side of things?
Yeah, so built to rent, look, we were very early in this space in 2014. We did the first built to rent community with Lennar, and this was the first community that they had done company wide on a contract basis or ever. And of course, now they do quite a bit of it. But built to rent for me has several distinct advantages and unique angles. The first being it's the perfect combination between single family home living, traditionally defined as ownership of a single family home, because till this kind of latest asset class that was created, you wouldn't rent a single family home for long term. And so it gives you the benefits of feeling like you're owning and living in a single family home with the independence and increased square footage that it has relative to multifamily. But it also gives you the benefit of the fully amenitized community setting that you get with multifamily and with the kind of culture and environment and people that's breeded around that. So in sum, that is why I think built to rent is a really interesting and compelling investment thesis and asset class. Also, I would say that the way that we are approaching built to rent is unique because one thing that we haven't spoken about yet, which is really important and characterizes the ARC firms, is we have created a preventative health and wellness program and app that we've integrated into our communities and for our residents. And that really comes from a personal belief that I've had for a long time, which is just because you're entry level or because you're mid market doesn't mean that you shouldn't be able to adopt and afford preventative lifestyle disciplines. So things like food intake, having fresh fruits and vegetables delivered to your home, mental health training, physical training, supplements delivered to your home, genetic testing in your home. So all these things are things that we offer as part of our ecosystem, and any renter that rents with us now has access to that. How that translates into a unique built to rent living experience for the ARC residents is that only with us will they find somebody that basically says, look, I don't really want to have a transactional relationship with you where I'm landlord, you're renter. I want to try to have an authentic one. So yes, you need to pay your rent to live here. But once we know that you live here, we're gonna dig in, and you're gonna hopefully dig in, and we're gonna teach you how to pay attention to these things. And by the way, a lot of it's very affordable and accessible. So this whole notion in the US that has been created around preventative health is really for the 1% and you can't access it. Total BS. You can access it. And so we're making that possible.
So I love that you guys are doing this, and we've tried to do this. So I haven't even mentioned this, but we also have multifamily ourselves that we own and operate. We try to do the exact same type of thing, and I believe that the demographic of people that are in our communities are not they don't care about any of this stuff, right? There might be one or two of them, but it becomes very unsustainable when you only have a very small handful of people that are interested in this. So I'm curious from your perspective, does this help attract a certain type of demographic to your communities, which then, pours into the culture of the area, the type of tenants that you have and you're able to attract? Is that, part of this as well? Does that make sense?
It makes sense. And it's a great point. I would say we're not there yet. We're not yet at a point where, from a marketing standpoint, we are purposely finding demographic that says, oh, I want to live there because of preventative health. It's more an afterthought and a bonus once they're there. And I want to push back on something you said a little bit. You said, look, as it relates to your tenants, you said they don't care. I agree and disagree, meaning I agree in that most people, this is not top of mind, right? They need to pay bills, they need to pay their cell phone bill, their car bill, their gas bill, etc. But we have found with some real data that if you teach them why they have to care about this and why they have to prioritize it, it actually moves up into their top 5 categories of spend and attention. But there's real education that needs to go into it, like years that we've been doing this. And I think that for those real estate investors and operators where this is important to them and they invest in it, they will find that you will have long-term relationships that are stickier with your residents and not at the expense of them being only transactional.
Yeah. Yeah. And I completely agree with the education stand or side of it, right? I guess we probably have quite honestly done a shitty job of trying to educate them. It was more like, here's a product or a service. Like we were looking at from our perspective where we are interested in these types of things. Like we were talking about the blue light blocking glasses. Like this is things that we're interested in. Other people are going to be interested in this, but they don't have any idea how any of that works. So I love the idea of, or the thought process of just needing to educate them more. And you have deployed this education through the, is it an app or something like that that
Yeah.
you've created?
Yeah, it's an app. It's IP that I created and that I own with another partner. It's called Arc Living, ARK Living. And we are in the process of having conversations with other real estate platforms to get them to deploy elements of this in their community. As a matter of fact, through the National Rental Housing Council, I created the Health and Wellness Board, which I chair. And we're running focus groups and education for other players in the industry, a certain size, of course, to get them to figure out what initiatives work best for their audience, and we want to help them implement it because we think that as landlords in the space, we're also fiduciaries of health and being, and so we should be offering certain minimum standards to our residents.
That's really powerful. Yeah, I love that. I love that approach. How about from, we've talked about why, right? Why do you build to rent? We've talked about it from the renter's perspective and actually living there and the benefits and all of that. What about from the investor's side of the equation, right? Are you guys taking on private investors or is this all institutional at this point? Talk a little bit about that and some of the benefits that are in this asset class for that type of people.
Yeah, we're fairly institutional at this point, and we just finished raising a fund, and which is purely institutional, and we will start deploying that Q1 next year. And I will say that we're not an RIA, so we're not qualified to take in all kinds of retail investors, but we do have ultra high net worth investors and family office types who also invest with us. But as you probably know, most of those are pretty institutional at this point as well. Look, I think that as an individual, I have plenty of folks that are approaching me with built to rent deals that are not in the box for what this firm does. And because I'm now chairman and not in a day to day operating role, I look at deals with people all the time in markets that we're not even in. And sometimes if I find those interesting or if I could be helpful, we're putting together JVs. But again, got to make sure that they're absolutely outside of the box of what we do here day to day. I think that there is no better risk adjusted return profile available in real estate today than built to rent or rental housing. And the reason for that is because there's fundamentally a lack of affordable housing supply. We all know that. What most of us don't talk about enough or consider enough is the fact that it's not just in this market or that market, it's nationwide and it's millions of units. And so if you're positioned to execute on these projects and you've built out a world-class operating team like we have with amazing technology and AI, I think that there's just no better investment out there. We're very bullish on the long-term viability of the asset class.
Yeah, yeah. Oh, and you mentioned the AI approach. Again, this is something that all types of companies across the board are looking to be able to get involved with and incorporating into their companies. Where have you found success in incorporating that? Is that anything that you've played in, or is that a different team, different department, in your organization?
No, that's the technology team here is very much integrated into the day-to-day operations and investment side of the business. And I would say that there's 3 areas where we've been successful at implementing that. The first is on the customer retention side. We have tools that we've partnered up with some third-party firms on where we're able to give our renters or our customers a much better experience. The second is looking at demand and pricing models. There is no real-time pricing model in the single family industry like there is in multifamily. But with the help of AI, we're getting closer and closer to being able to see how to adjust your rents or even your entry points into certain markets. And then the third, which is not complete, and it's something that I'm personally working on, is the emotional health side and the behavioral health side. There's a tool that I'm working on which will help work with people to understand the struggles that they're dealing with in their daily life. And once again, going to that theme of I want to have authentic relationships, I want to be service oriented, I want to help people. I believe that if as a real estate company, we continue to develop tools that connect with people emotionally and behaviorally, and we make them feel that, hey, we're here to listen to you and to your life struggles. We think that ultimately we build a longer term portfolio with better value.
Yeah. Yeah. Interesting. And all of these tools, I'm assuming that except for the demand pricing model, that one makes sense, but the customer retention and the emotional health side of things, I'm assuming that there's an AI element that is communicating with the person and ultimately would end up kicking them out to some type of support or whatever it is that they might need for that particular situation. Is that basically what you're using it for? Would
Yeah,
that be
yeah, yeah. That's a good way to summarize it. Yes.
yeah. Yeah. Interesting. Good, good, good. Yeah, this is all really interesting information. One thing before we get into the life crafting side of things, one thing that just comes to mind, you mentioned how you feel build to rent is a great asset to be involved in. Are there any negatives to it? Like where I'm going with this, I'm just curious again, you're very much so institutional at this point, but one of the pushbacks that I've been involved in some fundraising, capital raising for a couple of different projects. One of the pushbacks that we had always gotten was that it's basically new construction, right? So the return is a little bit more extended out. Are there any other challenges or things that you would say that you guys have been able to overcome or common hurdles that people might have about build to rent that you guys have been able to figure out and overcome? Does that make sense?
It does. I think that probably one of the biggest risks in the space right now is that because it's such a hot asset class, you have so many capital players without the operational experience or background that are getting into it. And I think that what that does is that erodes value because everybody has that same 5-year model. We'll build it, stabilize it, sell it. When a bunch of product is coming out on the market at the same time, it never really helps. And if you're not super thoughtful about the design or the built environment, which we focus on quite a bit, like how does the environment that we're building, how is that a nourishing and healthy environment for the residents where they can thrive as individuals or as families or whatever it may be? I think that's a risk. I think that's a risk. There's just too much happening at the same time. But look, that's supply demand, and there's not much that we can do about that.
Yeah. Yeah, that's a great answer. I completely agree. That happens with everything, right? Like across the board. When something becomes hot, it gets diluted because everybody wants to jump into the space. But no, that's good. So from an investor's standpoint, looking at that track history and that record, just like all other types of asset classes, really important that you understand that they have the history and the ability to be able to perform whatever it is that they say that they are going to be deploying. So yeah, love that. So yeah, so from the life crafting side of things, again, we just very briefly touched on what this was, and just for the listeners, in case they're not aware, basically every Sunday I lay out goals and action steps to be able to achieve those goals, and realize that I'm speaking to all of these amazingly accomplished individuals on the podcast. So I wanted to be able to learn from them and understand some of the things that they are deploying in their own lives. So we like to ask the question, what is the highest ROI activity that you have in your own life? And we had talked a little bit about this. Jordan and I talked a little bit about this before we got to recording here, and you had some thoughts on that. So go ahead and jump into what you feel your highest ROI activity is.
Yeah, I think whatever the routine that you choose to employ around health and wellness and balance, I think that whatever the routine is for you, being consistent about that makes all the difference in the world. For me, it's being very mindful about my sleep hygiene, certain amount of hours, my routine for sleep, my exercise and my food intake. I would say those are my top three. In second position, I'm starting to pay a lot of attention to exposure while you're resting to radiation from devices and the building biology, if you will. I think that's super important, not something that people look at often. And then, of course, your mindfulness, your breath work, your meditation, whatever you choose to do, or even prayer, which I do, all of these things, you can encapsulate them into really a 15-minute routine every day where you can plan what you eat, how you eat, when you're going to sleep, how you design that environment around you. That to me has a highest ROI. And because I'm pretty big into biohacking and longevity, and I'm actually working on a new business in that space, I would say that it's very clear based on data that if you want to achieve your business goals, you absolutely have to take care of yourself first, and you have to continue investing in that.
Yeah. So I'm curious about this 15-minute-ish routine that you're able to incorporate all of this in, right? So let's dive into that. And what does that look like for you on a daily basis? And uh, what one thing that a lot of people may not necessarily understand is that we pretty well are creatures of habit, right? Like we pretty well eat the same things day in, day out, like slight modifications, but it's not like we, need 1,000 different ingredients or anything like that. So there's some repetition, I guess you can say, from a planning perspective, but I'm curious how you do it, how you go about, laying this all out to make sure that your personal hygiene, personal being is taken care of. So just want to dive into that a little bit deeper to understand that planning process.
Yeah, look, to get to the point that you're investing 15 minutes a day to stay on track sometimes takes years of research investment, attending conferences and so forth. So I don't want to oversimplify it either. It took me a while to get to the point that it takes 15 minutes. But in essence, what the 15 minutes are, and it could be 20 or it could be 10. It really just depends on every person. Throughout the day, if I add it up, it's about 15 minutes of different segments that I have where I will stop and say, okay, whatever. It's 7 p.m. or 7:30. I'm winding down my day. What time am I going to plan to be asleep? I know that for me, my ideal window is somewhere between 9:30 and 10:30 p.m. That's where my circadian rhythms match the best with my chronotype, with the type of individual that I am. And I stop to plan when and how I'm going to sleep. What does that routine look like? Am I going to listen to a podcast for a little bit? Am I going to listen to music? Am I going to read a book? Do I want to shut down all the blue light and the devices? Then, for example, in the morning, I'll take another few minutes when I wake up and I'll just quickly plan on, based on what my calendar looks like, what my eating, what my food intake looks like for the day. And how am I going to make sure that I'm getting enough water? When am I taking my supplements and what types of supplements? Because am I doing weight training today or am I doing cardio or am I doing nothing? So my point is that based on the things that you conclude you have to do that work best for you, it just because you write it down doesn't mean you don't have to stop, be mindful about how you're going to actually execute on that. And it takes more time at the beginning, of course, but as time goes on and as you become more consistent and routine about it, it's really no more than 10 or 15 minutes a day to stay on track.
Yeah. Yeah. I'm curious what you would say. So again, just to level set here, and some people don't necessarily like to be called out this way. You do run or you've established a multi-billion-dollar a year company. There's a lot of people that will say, like, right off the top of their head, I don't have the time for whatever it is. So again, you obviously are incredibly accomplished and extremely busy, I'm sure, and you're able to work this in. Do you have any advice for people that might be struggling with how to squeeze even in this little bit of time into their schedule to be able to take care of themselves?
Yes, I will say, and I hope this doesn't come off too crude, but we all make the time for what matters most to us. That's the bottom line. If you're not making the time for it, it's just not enough of a priority. So what I would say is you need to make it a priority. You need to understand that the time that you invest today in your health is going to be time that you're going to have tomorrow to do more of what you want to do in life or be with your loved ones or just enjoy more time on earth. It's really as simple as that. I can say, just picking on one of many important healthy habits, let's just say movement, because it's important to move and to your cardiac rhythm up there a little bit. I recently met somebody, a much more successful and a busier executive than I am, because there's always somebody bigger, better, badder. We know that. And he said to me, he said, look, I really don't have the time to go push weights around 3, 4 times a week in a gym. But I found a system where I'm literally in the gym 4 minutes, 3 times a week. It's his own system. And his results are amazing. He looks amazing. He crafted, after years and years of struggling with this, like literally 4 or 5 minutes, 3 times a week. He gets his weight training in, and that's how he maintains. If you prioritize it, you will find a way to hack it, and you will find a way to do it where the right amount of effort and time that is right for you will do the job. That is it.
Yep. Yep. Yeah, I love the idea of you make time for whatever is important to you. There's always things that you feel are important. You're sitting on the couch watching Netflix. That could be the time that you eliminate that and prioritize something that is going to last you for many years to come.
Yeah.
I love that mindset. And just out of curiosity, you were mentioning quite a few different things. Do you wear an Oura ring too?
I do. This one is a superhuman one, but
Okay.
I mentioned I'm a little bit of a geek with his data and a biohacker, so I wear an Oura ring. Some weeks I wear the superhuman, other weeks because I like to compare the data. But
Yeah.
yes,
Out of curiosity, do you find a difference between either one of them?
I find the difference in the user interface. I think Aura has a little bit of a cleaner user interface, maybe more relatable, and a little bit of a larger, more established company. And I find that some of the data that the Superhuman gives you is far more interesting to me. I think it's designed for a community of people that are more into the biohacking and not just focused on sleep. So a little bit of a different market focus, I think.
Yeah, no, that's interesting. Yeah, this has been a fantastic conversation, Jordan. If people want to learn more about you or maybe the company or wherever you might want to direct them to, what would you suggest there?
LinkedIn is the best way to reach out. I'm monitoring that pretty closely. I'm also happy to give my email out and people can email me. Love connecting with people. So it's Jordan, JORDAN at TIMGMT.com.
Excellent. Jordan, this lots of great nuggets in here. Thanks for exposing the build to rent and all the thoughts on your biohacking and background on your personal fitness and all of that. Really appreciate everything that you shared with us here today. Thank you.
Thank you, Matt. Had a great time. Appreciate it.
What an incredible conversation with Jordan. His journey from identifying market gaps to building communities that focus on both profit and purpose is nothing short of inspiring. If you're curious about build to rent, biohacking, or just leveling up in life and business, make sure to connect with him on LinkedIn or shoot him an email. As always, thanks for tuning in to Invest in Square Feet, where we bring the strategies to make smarter moves in your real estate and beyond. We'll catch you in the next episode.